Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1265th edition of Short-Term Trading Live with Oscar. Welcome, 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 and good evening, traders. I should say good day. Traders, this video is coming to you on a Sunday afternoon for trading Sunday through Monday, January 12th, 2015. The reason why I'm bringing this video to you so early is that I've seen something very interesting. It's actually opposite of the way the Omni has been pointing lately, and I wanted to show it to you early so you've got time to study before markets open. Right off the bat, we've got an Omni pointing down, and I'll get to why in just a moment. Remember that futures trading is extremely risky, can be financially strapping. You can lose everything you've ever thought about owning in this game if you don't know what you're doing. It's not suitable for everybody. Always place stops first. Stops don't always work, but in most cases they will, so always put your stops in. And remember, when this is all said and done, it's my opinion, but I've been doing this for over 33 years, and I'll match wits with anybody on the street out there. Anybody. So let me show you what I've got going on. Traders, we've got a red Omni starting off for the Monday trading session. E-mini S&P, Dow, NASDAQ. We are looking for the downside. And let me just show you something. I told you in the last few videos we were going to have this major bounce, and it went right to the day it was supposed to bounce, and we bounced. And bravo for Omni. Very nice bounce, very nice call, and the market went up. I find this day very disturbing. This day on Friday did not continue on to make new highs, or at least didn't settle all the way up here, showing us it wants to continue on to new highs. Instead, it showed failure and settled down here, and I don't like the fact that the market turned and settled down here for many reasons. One, we've got the red Omni. Two, I've shown this to you many times. When you put in a deep low, you go up and make a new high. And then you put in another low, and you go up and make a new high. Then you put in another low. You should have ran to make a new high, or at least pointed up for Monday. We are pointing straight down in Omni for Monday. So that's one chart. Let's move on to a few others. This chart you will find interesting, I assure you. This is our leader, the Dow Jones Transportation Average. This is a daily bar chart. I am here to say that this is a fully developed bear flag at this moment in time. I don't know if it's ready to crack yet, but I'd have to call it a bear flag. Opposite direction of where we've been pointing for the last couple of days. So now it's starting to look bearish for trading Sunday, Monday in the Dow Jones Transportation Average, again in the Industrial Average, in the S&P, in the NASDAQ. These markets are looking weak for trading Monday. Let me show you E-mini S&P. In your E-mini S&P, once again, look at this market. It is starting to look a little bit bearish. Let me explain why. We had a low, rallied up and put in a high. Came down and put in a higher low, meaning this low was much higher than that low, as it should be. And then the next high should be a higher high, and it was. Perfect trading. A low, a high. A low, a higher high. What we have here, the next dip was a low, and we did not go up and make a higher high. Now, that doesn't mean it can't happen Monday and Tuesday, but I don't like the fact that, once again, we went all the way to the end or the bottom of the range and settled down here on Friday. So here's your settlement in the S&P. If it was strong, why would it not have settled high up here? So Omni has turned, and the markets are showing some interesting reasons why, and you failed at this point, as of Friday's trading, you failed to make that higher high, and you've got a red Omni pointing down, and I think that's the way this thing will start off for trading, certainly on Sunday through Monday. Then you've got a couple of interesting things here. Look at this chart. On the opposite end of the S&P, you've got gold. Great chart, weekly chart. These little umbrellas show you every time the market got up to this red line, it started to rain for the market, and it came back down, right? Little umbrella hit, down. Hits the red line, down, down. It goes near the red line, down, red line, down, red line. But now it's come, and usually when it hits the red line, it hits it and goes away, hits it, goes away. Almost hits it, goes away, hits it, goes away, hits it, starts to go away, comes back, hits it again. Question mark, gold, are we going to go higher? Well, let me show you what the daily chart in gold looks like. Bam. When you look at this chart, we had a shoulder, a head, a shoulder, and we were expecting an Oscarism called the head test of the head and shoulders. Ran up for the head test, started to come back down, and here's what I find interesting. Each time you get near the OTAPMA, or the OMNI Trading Academy's proprietary moving average, what tends to happen is the market breaks down. So you see it hits the average, it breaks, hits the average in a form of a bear flag, no less, and then breaks. Comes near the average, breaks, hits the average, one day above it, then it breaks. Here, so another test is coming. This is the chart I've been showing my OMNIX for the last few days. So I'm showing this chart to my OMNIX for the last few days, and I'm telling them before this day, and before this day, and before this day, that the market has to test. It came up for a head test. We cannot call it bullish yet. Will this head test fail? If it was going to fail, the market would have just turned and went like this. Instead, it's not failing. We add these days back in, and look what's going on here. You have now built what I'd say, pull this away for a moment, and I think you've built a bull flag right here above OTAPMA, and it's already breaking out of the bull flag. So it's not another test coming at this point. We have to turn this into a bull flag, because we trade what we see, not what we hope for, not what we pray for, not what we'd like these things to be. We trade what we see, and I see a bull flag. So forget about this is not a flag, this is not a flag, this is not a flag. That's not part of this anymore, so we're going to erase that. Failure at OTAPMA worked. Failure at OTAPMA worked. This time she's building a flag above OTAPMA, a bull flag. So bravo for gold. So gold looks bullish, and the indices, as I'm showing you, appear to look bearish. And I think this is news that you needed to see before the markets opened. Now, will the markets crack and will gold go up? Well, I don't know. How would I know? How can I know any of this? I use the charts just like you do, but the charts I read really well, and right now they are calling for the downside in emini, S&P, tranny, Dow, NASDAQ, you name it, the usual suspects, and upside in gold. Traders, remember, this is for trading through the 12th, 11th and 12th, I should say, of January. It's for Sunday night trading through Monday, and then we'll catch up with each other again on Monday. I will see you all at livewithoscar.com. Come into my free chat room and allow me to help you understand these charts in the way I teach them to my traders and the way I've developed the style for trading off these charts over 33 years. Traders, remember, try to keep your emotions at bay when you're in this arena. I know it's not easy. Put your stops in first so that you've got your insurance policies in place. And then say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Traders, thank you so much for watching my videos, and I'll see you at livewithoscar.com.